So now we are going to discuss IND AS 40, that is the investment property. This is the very important IND AS, and immediately after IND AS 16 property, plant and equipment, we are covering this IND AS 40 to better understand the purpose of both the IND AS. So let's start the discussion. First of all, we come on the meaning of the word investment property. What is the meaning of this word investment property? See, any property which is held by entity for the purpose of rental or for the purpose of earning capital appreciation will be classified as investment property. Now we know very well what is rental, but what is the meaning of capital appreciation? Suppose entity owns a land which it acquired at a cost of rupees 10 lakh with the purpose to resell this land after the period of 10 years at rupees 50 lakh. So this is the intention of the management while acquiring the property, that today we are acquiring this land and we will resell this land after 10 years at rupees 50 lakh and we will earn the capital gains of rupees 40 lakh. Okay, so this capital gain is nothing but the capital appreciation as per IND AS 40. So if any property is held to earn this rental and capital appreciation will be classified as investment. But here only the land, the building or the part of building or both will be covered, meaning thereby machineries, furniture will not be covered. So you can write this: machinery, furniture or bearer plants, it will not be covered. Okay, so held. Now what is the meaning of this held? See, either the entity has the ownership of that property or it has acquired that property under a finance lease, which you can say as a right of use asset. This word we will discuss in IND AS 116. For right now you can understand it as finance lease, meaning thereby that whatever the property which has been classified as investment property, it must be held by the entity, and that held means either the entity has the ownership right on the same or it has acquired the same under a finance lease, not as operating lease. You are getting my point? Now thereafter, or both, rather than for. Now meaning there, what is this rather than for? Whatever the property you have acquired, either it must be for rental or for capital appreciation, but not for use in production or supply of goods or services or for administrative purposes. If that property is held by entity for the purpose of production or supply of goods or for administrative purpose, then it will be classified as property, plant and equipment as per IND AS 16. Hopefully you were able to recall the definition of PPE as per IND AS 16. Any tangible item held for use in the production or supply of goods or services or for administrative services, it will be classified as PPE, not the investment property. So specifically the investment property excludes this particular point, that if you are using it for production or supply of goods or services or for administrative purpose, we are not going to classify it as per IND AS 40. Please go to the IND AS 16. It will be a property, plant and equipment. So hopefully it is clear to you. Now a question arises. Property, plant and equipment IND AS 16 also use the word rental to others, and here also the word rental has been used. So if the property has been let out, then whether we are going to classify it as investment property or as per property, plant and equipment, because both IND AS 16 and IND AS 40 are using the word rental. Yes or no? So now come to this point. If the rental is of machinery, furniture, bearer plant, undoubtedly IND AS 16 will be applicable, because this IND AS 40 is applicable in case of land and building only. Okay. However, if the rental is of land, building or both, then maybe IND AS 16, maybe IND AS 116 or maybe IND AS 40 are applicable. So we will check its application when 16 will be applicable, when 116 will be applicable, and when IND AS 40 will be applicable. So this is the next slide. Rental property IND AS 40, IND AS 16 and IND AS 116. So before starting the discussion on this topic, let me discuss the very first word, that is the cash generated unit. What exactly is this cash generated unit? See, simply any group of asset that can generate independent cash flows is classified as cash generated unit. Let us take a very simple example. Suppose an entity has a building having 3 floors. Okay. Now suppose the third floor is let out to an independent party, and in the first and second floor the entity is running its own office. Okay. Now this let out income from the third floor represents independent cash flow. Why so? Suppose by tomorrow these first and second offices, first floor offices get shut down. Entity decides to close down its offices. Still it can receive the rental income from third floor. Yes or no? So the third floor has independent cash flow. So I can classify this third floor as cash generated unit. The word cash generated unit. Hopefully it is clear to you. Okay. Now coming to this point, rental property, the very first point, very important. If the property held for rental have independent cash flows, the property for which you are talking about to classify as investment property has independent cash flow, like in this example the third floor has independent cash flow representing a separate cash generated unit, then it will be classified as investment property as per IND AS 40. Otherwise it will be covered by other IND AS. Hopefully you are getting my point, that when the property will be classified as investment property, if it is able to generate independent cash flow, I will classify it as investment property. Otherwise it will be covered by the other IND AS. Now let us take an example of other IND AS. Property held for rental to employee. Now what is this rental to employees? Suppose the entity owns a building nearby its factory which is let out to the employees, and from the employees the entity is charging the rent at market value. Okay. Now tell me one thing. Suppose this factory gets shut down permanently, whether this property can be let out to employees after shutting down this factory? The answer is no. Big no. The employees are staying in this property because they are working in the factory. If this factory will get shut down, they will not stay there. Hopefully you are getting my point. So this is the main point that you need to understand, that you cannot say that this building is generating independent cash flows. Whatever the rent you are able to generate from the employees is just because of this factory. So here you cannot use the word that this building is providing the independent cash flow. So if the property is held for rental to employee, it will be covered by IND AS 16, that is the property, plant and equipment, not as per IND AS 40, because that rental income is not generating independent cash flows. So hopefully you are getting my point. When IND AS 40 will be applicable on case of rental, when it is generating the independent cash flows. Hopefully it is clear to you completely. Okay. Rental with significant amount of other services. Now what is this rental with significant amount of other services? Let's discuss. Suppose the entity let out the property with significant amount of other services. Let us take a simple example. Entity owns a hotel where services provided to guests are significant, and we know very well that in hotel industry, just you are not providing the room to the customers, you are providing the number of services apart from the room, and in case of hotel industry that services become a significant part. Yes or no? So if the entity owns a hotel where services provided to guests are significant, so you can treat it as owner occupied property, not as investment property, because whatever the rental you are charging, that is not only for the room, rather than you are charging for the services also. You are getting my point. So If the rental with insignificant amount of other services, let's take an example. Owner of building provides security and maintenance services to the lessee. Okay, the lessor leased out the property, and apart from the building, the entity is providing the security and maintenance services which are insignificant. So here you can classify it as investment property. So if the rental with significant amount of other services, it will be covered by the IND AS 16, not by the IND AS 40. Now, how to understand, how to classify whether the particular services provided by the entity in respect of land or building or both is significant or insignificant? So that is the call of the management. On the basis of practical aspects, management will take the decision and will provide the reasoning to the auditor on the same. So hopefully it is clear to you. Okay. Rented as finance lease is covered by IND AS 116. See, whenever we are talking about rental to others, whether in this or in this rental is only the operating lease where the agreement is signed between the lessor and lessee for a period of generally practically of 11 months or 12 months. Okay. And after that, if both the parties agreed, then it may be renewed for some period of time on the basis of some mutual understanding. However, if you are letting out the property and that rental income that rented as finance lease, then it will be covered by the IND AS 116. Okay. In other cases, it may be classified under IND AS 40 subject to independent cash flow. So main point, the main consideration is, while classifying whether the property will be classified as investment property or not, the first point, it must be a land, building or both. It must be owned by the entity or the entity has acquired it, acquired it under finance lease, not as operating lease. You should understand this point very carefully, that you may acquire this property as finance lease, but when you are leasing out that property, that must be operating lease for the purpose of classifying it as either investment property or PPE. If you are giving it on rental to any other party on finance lease, then it will be covered by the IND AS 116. Okay, sure. So this is the main point that you need to understand, and that for the purpose of investment property, the purpose must be to earn the rental or capital appreciation. Okay, if the purpose is to use it in the production of supply of goods or services or administrative property, it will be classified as PPE. Okay, so these are the most important slides of IND AS 40. Kindly look at these very carefully. You may get the question from this slide. Now coming to the term owner occupied property. See, any property which is held by entity for the purpose of use in production or supply of goods or services or for administrative purpose will be classified as owner occupied property. In very simple words, if you have to write that this property is not an investment property, this property is property, plant and equipment, then instead of using these words, you will use the word owner occupied property. So remember, not an investment property, property, plant and equipment, these words are not defined in IND AS 40. Rather than while writing that this property is not an investment property, this is a PP, you will simply write this property is owner occupied property, because it simply includes all the properties which are held by entity for production or supply of goods or services or administrative purpose. If these properties are held by owner, then it will be covered by IND AS 16, that is property, plant and equipment. If these properties are held by entity under a finance lease or right of use asset, then it will be covered by IND AS 116. Leases applies to owner occupied property held by a lessee as a right of use. Okay, so hopefully it is clear to you. Now coming to the next, that is the difference between the investment property and owner occupied property. See, difference between investment property and owner occupied property, this we have discussed in the previous video itself. Any property which can generate independent cash flows representing a separate cash generating unit will be classified as investment property. Yes or no? But if it cannot generate independent cash flows, it does not represent a separate cash generating unit, we will not classify it as an investment property. Rather than we will classify it as an owner occupied property. So in investment property, cash flows are largely independent of other assets. It represents a cash generating unit since they generate cash flows that are largely independent of the cash inflows from other assets or group of assets, thus meeting the definition of cash generating unit as per IND AS 36, impairment of asset. This word we will discuss in detail in IND AS 36. Just for the purpose of understanding the IND AS 40, we have taken a part of explanation of this word in the previous video itself. Now, owner occupied property cash flows are not attributable to property only but also to other assets. Like we have taken the example of that factory where you provided a premises to the employees on rent to the employees at market value, but still we cannot consider that property as investment property because employees are staying there just because they are working in the factory. If tomorrow this factory will get shut down, obviously these employees will leave the premises and you will not be able to generate any independent cash flows out of this. So that property will not be classified as investment property. Rather than in the previous video itself, we see that that property will be classified as owner occupied property and will be dealt as per IND AS 16. Yes or no? Sure. So used in the production or supply process, it is because such property is used in production or supply of goods or services or administrative purpose, therefore it cannot be classified as cash generating unit. So hopefully the point is clear to you. Now there are some examples of investment property. If any land is held for long-term capital appreciation, it will be an investment property. If land held with undefined future purpose, still you can classify it as an investment property. If the management has yet to decide the purpose for which that land may be used in future, you can simply decide it, you can simply consider it as the investment property. If the building is owned by entity and leased out or held to be leased out to one or more operating lease, it is an investment property. Property constructed with the intention for future use as investment property will be classified as investment property. However, following will not be classified as investment property, which includes any property held for sale in ordinary course of business, owner occupied property, employee occupied property, whether or not employee pay rent at market rates. So these will not be classified as investment property. Thank you. Now coming to the next topic, property held for more than one purposes. Suppose entity owns a building which is partially owned for administrative purpose and partially for rental or capital appreciation purpose. Then in this case we will say that this property is held for more than one purposes. Now what will be the accounting treatment as per IND AS in case property is held for more than one purposes? So firstly we have to check whether we are able to split or we are not able to split, meaning thereby whether you can clearly distinguish between the owner occupied property and investment property or not. If you are, then it will be called as able to split. Then rental income other than which are covered by IND AS 16 or 116 will be covered as per IND AS 40. Let us take an example. Suppose entity owns a building in which first, second, third and four floors are there. Okay. Now suppose first and second floor are used by the entity for running the own corporate office and third and fourth floor are let out to independent third party. So now in this case you can clearly see that whatever the rental income you are getting from the third party clearly represents that this property is an investment property, but these first and second floor are used by the entity for the purpose of administration. Yes or no? So this represents basically the owner occupied property and this represents investment property. Yes or no? So rental income which is not covered by IND AS 16 and 116, IND AS 40, owner occupied area, that is which is held for production or administrative purpose, it will be as per IND AS 16. Hopefully it is clear to you. Suppose in this building the first and second floor are used by the entity for corporate purpose, and third and fourth floor are let out to the employees of the company. Third and fourth floor are let out but to the employees of the company. So now in this case the entire building will be considered as per IND AS 16. Why so? Because if you are letting out the property to the employees, then it cannot be said to generate independent cash flows, and here we will classify the entire property as per IND AS 16 itself. Yes or no? So hopefully you are getting my point. So basically you have to see if the property is held for more than one purpose, whether we can distinguish the investment part and owner occupied part or not. If yes, then the part which is used by the entity for the purpose of administration, production or any similar nature, then it will be classified as owner occupied, and rest of the part will be classified as investment property. Not able to split. Then what you have to check? You have to check whether significant portion is owner occupied. Owner occupied means held for use in production or administrative purpose. Significant portion. Now what is significant, what is insignificant, that is the call of the management. Okay, so if the significant portion is owner occupied, then IND AS 16. If insignificant portion is owner occupied, IND AS 40. For example, there is an area in which the entity does some partition, and part of the area is used for admin purpose and part of the area is let out to third party. Okay, so now if this let out area is insignificant and this admin area is significant, okay, this is significant, then entire property will be dealt in as per IND AS 16. However, in vice versa case, the entire property will be dealt in as per IND AS 40, because this particular property cannot be separated for legal purposes, so we need to classify it either as per IND AS 16 or IND AS 40. In case of floors, you can classify it because you can transfer the legal titles of each and every floor to separate parties. But if a particular area, in a particular area some partition has been done by the entity and some part is let out and some part is used for admin purpose, this temporary partition is not recognized by the law for the purpose of transferring the legal rights. So you need to classify the entire property as per IND AS 16 or IND AS 40, and for that provisions have been provided in the IND AS itself. So hopefully you are getting my point. See, there are 3 transactions. Entity having 15 floors, of which it uses 5 floors for its offices and the remaining 10 floors are leased out to tenants under operating leases. The main point is that the entity can sell the legal title of these 10 floors, retaining legal title of other 5 floors, meaning thereby each and every floor is independent in nature. If the entity wants to dispose of any particular floor, it can do so. So here the entity is able to split, then these 5 floors in which the entity is running its own office will be classified as per IND AS 16, that is property, plant and equipment, and these 10 floors will be classified as per the investment property. So hopefully it is clear to you. Entity uses 35% floor of the office floor space as its head office and leases out the remaining 65% to tenants. So now again there's a office floor space in which 35% is used for the purpose of running the head office and rest is leased out to some tenants, to the third party. And it is clearly given that it is unable to sell the tenant space or enter into finance lease related solely to it, meaning thereby there are some temporary partitions in the property itself. Legally you cannot dispose of a particular part, you need to dispose of the entire part. So now if the entity assumes that office floor is significant, then it will be classified as per IND AS 16. If it considers that the owner occupied portion, that is office floor part, is insignificant, then it will be treated as per investment property. Here the answer is entity should not classify the property as investment property. You will write the assumption here while writing the answer of this question, assuming significant space is owner occupied. Okay. Entity owns a hotel which includes a health and fitness center housed in a separate building that is a part of premises of the entire hotel. There is some space, there is a hotel building, and there is a health and fitness center. Okay, in the main consideration it is given that health and fitness center will be leased out to an independent operator and can be sold or leased, meaning thereby this health and fitness center can be separately disposed of in any manner. It's not like that it is an internal part of a hotel. Okay, so now in this case this health and fitness center can be classified as an investment property, yes or no? So entity should classify health and fitness center as investment property as per IND AS 40. So hopefully it is clear to you. Kindly look at this video and slide carefully. On this you can find a question in your exam. Thank you. Now coming to the another important part, that is the disclosures. See, as such IND AS 40 has clearly specified the criteria by which you have to classify the property as an investment property or property, plant and equipment or held for sale whatsoever. But still, if there is difficulty in classification, the standard requires an entity to disclose the criteria based upon which it distinguishes between the investment property from owner occupied property and from property held from sale in the ordinary course of business. Though there are criteria as per IND AS 40, still if the entity is facing some issues, it can develop its own criteria within the guidelines provided by the IND AS 40, and accordingly by disclosing the same in the notes to accounts, it can classify the properties either as investment property or owner occupied property or as inventories. Also, in case of acquisition of asset or group of assets, entity needs to provide the criteria to separate the transaction from IND AS 103 business combination if select classification is difficult. In very simple words, in case of amalgamation, if the entity has acquired some assets and it is facing the difficulty to classify the same as an investment property or owner occupied property, then it can develop some criteria, and by disclosing the same into the notes to accounts, it can classify the same either as investment property or owner occupied property as per its own policy. But the main point is the facts must be disclosed in the notes to accounts. Now after that, there is a very good summarization of all the points that we have discussed. Let us discuss it one by one. So very first point is, owned by a company, there is a property which is owned by a company and leased out under an operating lease. See, we know if the property is owned by the company, it may be owned or it may be under finance lease, but let out under operating lease, then it will be considered as an investment property, provided that operating lease is not to the employees. Next is held as right to use. Right to use simply you can understand as finance lease for the right now, and leased out under an operating lease. So that is also allowed. If you have taken a property on finance lease and you're letting out as an operating lease, that is allowed, not an issue. It can be classified as an investment property. Held as right to use, meaning thereby finance lease, and leased out under finance lease, this is not allowed. This will not be covered by the investment property. For this we have IND AS 116, that is the leases. Property acquired with a view for development and resale. So this is basically your inventories. If you're acquiring the property and you will resell it after development, then it is basically the inventory. It's not the investment property. It will be covered by the IND AS 2. Property partly owner occupied, partly leased out under operating lease. Partly owner occupied, partly leased out means it's the property for more than one purposes. So we will see whether we are able to split or not, and accordingly treatment will be decided. So it depends whether IND AS 16 will be applicable or IND AS 40. Land held for currently undetermined use. If the use is not determined, then you can classify it as an investment property. This we have already discussed. Property occupied by employees paying rent at less than market rate. Employees have acquired the property, they are paying rent which is less than the market rate. See, property is let out to employees, it was covered by IND AS 16, not an investment property. Investment property held for sale, it will be a part of IND AS 105, that is property held for sale. Existing investment property that is being redeveloped for continued use as an investment property. So it is again an investment property. I think there is no issue in this. So in this we have discussed a very good summarization of all the parts that we have discussed earlier, and very good summarization has been made by the institute in this respect. So kindly look at this carefully. Thank you. Now coming to the next topic, recognition of investment property. See, it is absolutely same as we have discussed in IND AS 16, that is property, plant and equipment. See, cost to be recognized as an asset if it is probable that future economic benefits will flow to the entity, and cost of investment property can be reliably measured. You can see each and every word is same except the word investment property. In IND AS 16 the word was property, plant and equipment, and here we are using the word investment property. So it is absolutely same. Now coming to the next, recognition of subsequent costs. So there are two parts, repair and maintenance and replacement of parts of investment property. If it is about repair and maintenance, that will be charged to profit and loss account. If it is about replacement of parts of investment property, then whatever the cost is incurred in new part, that will be recognized in the carrying amount of investment property, and the amount of part replaced, the carrying amount will be de-recognized from the books of accounts. And coming to the next, that is the cost of investment property, how it will be calculated. So it is same as property, plant and equipment. You can refer the IND AS 16 that we have discussed earlier. So entire provisions you can see, initial recognition, subsequent cost recognition and cost of investment property, all are same as IND AS 16. Now we will start discussing the numerical thereafter. Thank you. X Limited owns a building which is used to earn rentals. So it is very clear that owns a building which is used to earn rentals. It means it's an investment property. The building has a carrying amount of rupees 50 lakh. X Limited recently replaced interior walls of the building and the cost of new interior walls is rupees 5 lakh. Okay. The original walls have a carrying value of rupees 1 lakh. How X Limited should account for the above cost? So it is very simple. The cost of new part will be added in the carrying value, and the old cost carrying value of old part will be de-recognized. So accordingly 50 lakh plus 5 lakh minus 1 lakh, total 54 lakh value will appear in the financials in respect of the building. So firstly you will write the provision that as per IND AS 40, investment property in case of replacement of part of investment property, cost incurred in new part is recognized in carrying amount, and amount of part replaced is de-recognized from the carrying amount, and accordingly the solution will be this. So in this way you have to present the answer. Netravati Limited purchased a commercial office space as an investment property in the Global Trade Center commercial complex for rupees 5 crores. However, for purchasing the same, the company had to obtain membership of the Global Trade Center Commercial Complex Association by paying 6,25,000 as a one-time joining fee. Okay, so for buying this commercial office space, this Netravati Limited needs to buy the membership of Global Trade Center Commercial Complex, and for that it paid the amount of 6,25,000 as one-time membership fees. Netravati Limited wants to write off the one-time joining fees paid as an expense under membership and subscription charges and value the investment property at 5 crores. So whether it is possible? So no. If you have paid the membership fees just for because you want to acquire some commercial complex from this Global Trade Center, and it is mandatory to obtain the membership to acquire this property, then it's a directly attributable cost, and in case of directly attributable cost, it will be added to the cost of investment property. So accordingly 5 crores plus 6,25,000, the property will reflect in the books of accounts at 5 crores 6,25,000. Would your answer would change if the office space was purchased with the intention of using it as an administrative center of the company? No, the answer will remain same. Here in this case we will write the answer as per IND AS 40, but here we will write the answer as per IND AS 16, because if you are buying the asset for administrative center for administrative purpose, in that case IND AS 16 will be applicable and treatment will be as per property, plant and equipment. And we have already seen that cost, whether you're talking about cost of investment property or cost of property, plant and equipment, the method to compute the cost in both the situation is absolutely same. So in both the cases, the amount of 5,06,25,000 will be shown. In the second case, it will be as per IND AS 16. In the first case, it will be as per IND AS 40, and it's a directly attributable expenditure. That's why it has been added into the cost of investment property. Okay. Now coming to the next topic, measurement after recognition. See, it's very simple. After initial recognition, entity shall adopt cost model for all its investment property. There is no concept of revaluation model in case of investment property. And this cost model you have to adopt as its accounting policy by following the respecting IND AS. For example, if the investment property is held for sale, then IND AS 105 will be applicable. If it is held by lessee as a right of use, that is finance lease, then IND AS 116 will be applicable. And in other cases, like if it is for any other purpose which is not covered by first and second point, then it will be as per IND AS 16, property, plant and equipment. In very simple words, the IND AS 40 is applicable only for the purpose of initial recognition. Thereafter, you will switch over to the respective IND AS, whether it is 105, 116 or IND AS 16, and only cost model will be followed in case of investment property. There is no concept of revaluation model. It is very clear. But there are certain points which you need to note very carefully for the purpose of disclosure requirement, and you may get the question on these. See, even though entity is required to follow the cost model, the entity will compute the fair value of investment property, and the same will be disclosed in the notes to accounts. Entity is required to measure the fair value of investment property for the purpose of disclosures, even though cost model is followed for the accounting purpose. And it is encouraged, it is not mandatory, it is encouraged by the IND AS 40 that you should take the services of independent valuer for the purpose of fair value measurement of investment property. So these are very important points. Although it's a rebutable assumption is that entity can reliably measure the fair value of an investment property. Still, if the fair value cannot be measured because the market for comparable properties is inactive, similar transactions become less frequent, or market prices are not available, or there is no alternate reliable measure of fair value to compute, then in that case, the entity will show the fair value of the property into the notes of accounts of the previous year with the variations which the entity expect to arise in near future. A fair value of investment property is not reliably measurable on continuing basis. The entity shall make the disclosure for the same, that we are not able to reliably measure the fair value. And if the entity has previously measured the fair value of an investment property, it shall continue to measure the fair value of that property until disposal even market is inactive, meaning thereby the previous year value will be disclosed as the fair value, and if there are some expectations about the variations, that will also be disclosed. Here you will see, we will discuss this, if possible, the range of estimate which fair value is likely to lie. So let's see what exactly it is. Treatment when fair value is not reliably measurable. So there may be two cases: properties under construction, or other cases if the property is under construction and the management of the entity thinks that fair value is not reliably measurable, but entity expects that value of the investment property will be reliably measurable when construction is completed, then in that case the fair value of that property will be computed when it becomes reliably measurable or construction completed, whichever is earlier. In either of the case, you need to compute the fair value of investment property and need to disclose the same into the notes to account. So hopefully you are getting my point. If it's other than construction property, then entity determines that fair value is not measurable on a continuing basis, then entity shall disclose the description why fair value cannot be reliably measurable. It may be due to that market for comparable properties inactive, or alternate reliable measurement of fair value are not available. Whatever the points are there, the management need to disclose it, and if possible the range of estimates with which fair value is likely to lie. So simply you will disclose the previous year value, and if some variations are expected in the same, you will disclose the same also. Okay. Now coming to the next topic, that is the reclassification. What is this reclassification? If there is change in use of property, meaning thereby, suppose there was the investment property, now you are using the same for administrative purpose. So now it's a change in use, because earlier it was the investment property. Now if you are using it for administrative purpose, it will be classified as property, plant and equipment and treated as per IND AS 16. Yes or no? So if there is change in use of property, then entity shall reclassify the same. Okay. However, just change in management intention for the use of property does not provide for the evidence of change in use. There must be a substantial evidence that yes, that the property has been used for some another purpose, and only then you can reclassify it. A change in use occurs when property meets or ceases to meet. What exactly it is? See, a change in use occurs when property meets. When property meets means, suppose there was a PPE. Okay. Now that PPE which you were using, the entity was using for the purpose of administration, now that property has been let out to some independent party. Okay, so now that PPE need to reclassify as an investment property, yes or no? So now if you have let out that PPE to some independent party and that lease is an operating lease, so now that is meeting the definition of investment property, yes or no? So when property meets or ceases to meet, for example, there was a building which you were basically using it to generate the rental incomes, but now you are going to use the same for the purpose of administration in your own business. So now the investment property ceases to meet the definition of investment property and need to reclassify as property, plant and equipment. Hopefully you are getting my point. Okay, so if there is a commencement of owner occupation, meaning thereby that the investment property will be used for administration purpose or for the purpose of production of goods or supply of services. Okay, so now existing IND AS was 40, but now with the commencement of owner occupation, IND AS 16 will be applicable, because the purpose of that property gets completely changed. Commencement of development with the view to sale. So existing IND AS was IND AS 40, but now IND AS 2 will be applicable because that will become your inventory. End of owner occupation. Suppose there was a building in which you were running your own business. Now that business gets shut down and you will let out the property. So obviously IND AS 16 was applicable earlier, because earlier you were using the property for administration purpose. Now IND AS 40 will be applicable because that property becomes your investment property. Okay. Entity decision to dispose the investment property without a development. No need to reclassify it as an inventory. It will continue to treat as investment property until it is derecognized. So suppose there is an investment property and the entity decided that this will be disposed of without development, so it will continue to treat as an investment property. It will not be an inventory. This point we have already covered earlier in the quick recap. Redevelopment of an existing investment property for continued future use as an investment property remains investment property and is not reclassified as owner occupied property. So if there was an investment property, you have made some developments in the same and will use the same in future as an investment property, then it will continue to classify as an investment property, not as an owner occupied property. Okay. Transfer between investment property, owner occupied property and inventories do not change the carrying amount of the property transfer. What exactly it is? Suppose if you are reclassifying the property from investment property to PPE to inventories or vice versa, yes, there will be a reclassification in disclosure in notes to accounts, but the carrying value of that property will remain same. That is not going to be changed at all. In all the cases, the carrying amount of the property will not change. It will remain same. Just there will be a reclassification in the books of accounts, nothing more than that. Thank you.